Now, it's no surprise that as stock markets struggle, we've just shown you the European trade, bond markets are thriving. Brian Luke has been keeping an eye on the bonds. And Brian, you're seeing kind of a surprise leader for the sector.
Yeah, I was very surprised when I actually looked through and started looking at the data of who's doing well in terms of the bond sectors. Of course, the stock market is languishing. Got off to a good start, and now it's falling after kind of treading water throughout the year. But commercial real estate bonds, okay?
Of all things.
Of all things. And they're doing the best out of all the bond sectors, trumping the stock market, of course. But, when you look at the comparative returns of the stock market and the bond market in a few different ways, let me show you. Talk about the S&P 500 up only 0.2%, whereas you talk about treasuries are positive. Last year, they lost you money, but now this year, they're actually making money about 1.4%. And then finally, 4.8% returns. On this year alone, we're talking about 3 weeks, and we still got terrific returns for commercial mortgage-backed securities.
So what's driving the rally in commercial real estate securities?
Well, there's a couple fundamental things and there's a couple structural things. First of all, the fundamental things. Well, Moody's reported that commercial property prices actually increased, and a lot of people are going to be surprised to hear that actually increased a small 1% back in November. A couple other things, that transaction volume has been picking up steadily throughout 2010. So the securitization market, the whole CMBS 2.0 thing might actually get off the ground. But PIMCO is also getting involved in this. And let me tell you why. A lot of the insurance industries is trying to move away from Standard & Poor's and Moody's, and they're trying to rely on somebody else to rate the agencies and rate these debt for all these loans. Now, PIMCO created a model, they put it together, and now the people are using it. That's created a lot of demand for the product. That's pushing more people, giving a little bit more confidence going into the loan market and the commercial real estate loan market in particular. That's why we're seeing an additional accelerating return for commercial mortgage-backed securities. And then go forward with that. We had a huge run last year, 28% returns, and then you go continue that on, and we've got 4.8% returns this year. It's been very, very solid.
When you talk to people about this rally, what are they saying in terms of how much legs it has?
Well, and a lot of it depends on how the supply structure is going to come out there. The FDIC is going to be coming up, and how much government support, like I said, that CMBS 2.0 thing is going to have to come out to help keep that securitization market going strong. So.
All right. Thanks very much, Brian Luke, on the rally in commercial real estate bonds.